2022. You file your taxes. You made $60,000, paid $12,000 in taxes. 20%. Fair enough. That's the deal. Google made $280 billion. Guess what they paid in taxes? 4.2%. Meta made $117 billion. Amazon made $514 billion, paid, number, 5.1% in U.S. federal taxes. You paid 20%. They paid less than 6%. How? Ireland, Luxembourg, the Cayman Islands, Netherlands, shell companies, intellectual property licensing, transfer pricing, completely legal. Welcome to the Monopoly Files, where we learned the most important rule of the global game. Taxes are for poor people. Today, how the richest companies on Earth play countries against each other, and you pay their share. Meet the players, the tax avoidance all-stars. Let's meet the champions. Tim Cook, Apple, testifies before the EU. Apple paid 0.005% tax in Ireland on billions. He says, on record, "We pay every dollar we owe, not a dollar more, not a dollar less." Technically true, because they rewrote the rules to owe nothing. Mark Zuckerberg, Meta. Meta makes $40 billion profit. Most of it routed through Ireland, then Cayman Islands. U.S. tax bill, $4 billion on $40 billion profit. That's 10%. You pay double that on your bartending tips. Jeff Bezos, Amazon. Amazon made $11 billion profit, paid $0 in U.S. federal taxes, zero. Actually, they got a $129 million tax rebate. The government paid them. Sundar Pichai. Google parks profits in Bermuda, no corporate tax, through a scheme literally called the Double Irish with a Dutch Sandwich. Not making this up. That's the actual name. These aren't criminals. They're monopoly champions, because they figured out the secret. If you're big enough, you don't pay taxes. You negotiate them. Here's how they do it. It's called profit shifting. Step 1, you're Google, based in California. You invent an algorithm, search engine, valuable. Step 2, transfer the intellectual property rights to a shell company in Ireland. Doesn't matter that the algorithm was invented in California. On paper, it belongs to Google Ireland. Step 3, every time Google US uses that algorithm, they pay licensing fees to Google Ireland. Billions every year. That money, tax deductible in the US, so Google US pays less US tax. Ireland, 12.5% corporate tax rate. Step 4, the money arrives in Ireland. Ireland's corporate tax rate, 12.5%. Sounds great for Ireland, right? Except the money doesn't stay. It goes to another Irish shell company, then through the Netherlands, 0% withholding tax. Then to Bermuda. Bermuda's corporate tax, 0%. So Google deducts billions from US taxes, routes through Ireland, pays minimal tax. Parks profits in Bermuda, pays zero tax. How many Google employees work in Bermuda? Number appears. 0. There's one mailbox. But on paper, that mailbox made $23 billion last year. Amazon, same playbook. Through Luxembourg. Meta, Ireland to Netherlands to Cayman Islands. Apple created companies that were legally stateless. Not Irish, not American, nowhere. Which country should tax them? None. That was the plan. On the Monopoly board, they landed on tax space and just moved the space to another board. Governments, specifically Ireland, Luxembourg, Netherlands. Ireland wanted this. Apple's European HQ, Dublin. Google's European HQ, Dublin. Meta's European HQ, Dublin. Why? Because tech companies bring jobs. Not many, but some. And Ireland gets to claim, we're the tech hub of Europe. Plus, even at 12.5% tax, that's billions Ireland wouldn't have gotten otherwise. Except, the EU isn't happy. EU rules Apple owes Ireland $14 billion in back taxes. Ireland's response? We don't want it. The EU forces Ireland to collect taxes, and Ireland refuses. Because if Ireland makes Apple pay taxes, Apple might leave. And Ireland would rather have Apple than $14 billion. Luxembourg, same deal. Amazon paid 0.5% tax in Luxembourg for years. Jean-Claude Juncker was Luxembourg's prime minister when these deals were made, then became president of the European Commission, the body supposed to stop tax avoidance. Conflict of interest? Nah, just the game. Netherlands, the middleman. 15,000 shell companies in Amsterdam alone. Most are just mailboxes, but on paper, they process trillions in transactions, so governments try to stop it, pass laws, make threats, and the companies move. If Ireland cracks down, Singapore. If Luxembourg closes loopholes, Switzerland. Because there's always a country willing to sell out. On the monopoly board of global tax, countries aren't regulators. They're bidders. And tech giants, auctioning their taxes to the lowest bidder. The victims, who pays when they don't. So who pays when they don't? You. In the 1950s, U.S. corporate taxes funded 30% of the federal budget. Individual income tax, now 50% of the budget. They paid less, so you paid more. Simple math. Europe, same story. Ireland has Google, Apple, Meta, but Irish hospitals, underfunded, schools, overcrowded, because the money those companies should pay in taxes, it's in Bermuda. The U.S., crumbling infrastructure. Amazon trucks drive on roads they didn't pay for, use bridges they didn't fund, ship through ports taxpayers built. Their tax contribution? $0. Meanwhile, the coffee shop on the corner pays full taxes, can't move profits to Bermuda, can't hire Irish shell companies, can't afford armies of tax lawyers, so when Amazon undercuts them on price, the coffee shop closes, and Amazon expands. This isn't about smart business. It's about rigged rules. On the monopoly board of capitalism, small businesses play by the rules. Big tech rewrites them. And when you ask, why do I pay more taxes than Amazon? The answer is simple, because you can't leave. The fight back. Europe tries, fails, tries again. Europe tried to fight back. Meet Margrethe Vestager, EU's competition commissioner, the only person big tech actually fears. She's fined Google $9 billion, Apple $14 billion, Meta $1.3 billion. Finally, someone fighting back, except the companies appeal, drag it out for years. Apple's $14 billion fine overturned. EU court rules. Not enough evidence of illegal tax deals. Not enough evidence, even though the deal was in writing. Google pays fines, then keeps doing it. Because $9 billion sounds like a lot, until you realize Google makes $280 billion a year. That's 3%. It's like getting a speeding ticket for $50. When you just robbed $2,000, you pay the ticket, keep the money. EU proposes a digital services tax, 15% minimum corporate tax, globally. The US threatens retaliation. Tax our companies, we'll tax yours. Ireland and Luxembourg lobby against it. This will destroy our economies. Translation: we'll lose our tax haven status. The proposal passes, barely. But it's watered down, full of loopholes. And the companies? Already finding workarounds. Because on the monopoly board, regulators move one space at a time. Companies teleport. The monopoly lesson, the game you can't win. So here's the lesson. Taxes aren't broken. They're designed this way. The U.S. tax code, 70,000 pages, most of it, loopholes, written by corporate lawyers, lobbied into law by the companies using them. Google, Amazon, Meta, spend $70 million per year on lobbying. What are they lobbying for? To keep the loopholes open. And the politicians writing tax laws, funded by the same companies? It's not corruption, it's just the game. On the monopoly board of global finance, there are two sets of rules. Your rules: taxes mandatory audited. If you mess up, jail if you cheat. Their rules: taxes negotiable. Mistakes are just fines. Jail? Never. You make $60,000, pay $12,000, 20%. Jeff Bezos makes $6 billion, pays 0.73%. Not because he's smarter, because he can afford the lawyers who wrote the loopholes. Small businesses can't compete. Not on price, not on taxes. So when politicians say, we need to tax the rich, and nothing changes, it's not incompetence. It's the feature, not the bug. On the global monopoly board, they own the properties, they own the bank, and they wrote the rules. You're not playing the game, you're funding it. Conclusion. The closer and teaser. Google, Meta, Amazon, Apple, billions in profit, pennies in taxes, not illegal, just legal theft. They didn't hack the system, they bought it, and we paid for it. Next episode, Credit Suisse, 167 years old, one of the world's most trusted banks, collapsed in 48 hours, $1 trillion in assets, gone. What happens when a bank too big to fail, fails anyway? And why did nobody see it coming? Because everyone pretended it was fine, until it wasn't. This was the Monopoly Files, where we learned the house always wins. Unless the house is a bank, then we all lose. Subscribe.